This is the first time I've been to this. I'm thankful for the invitation I've had to come speak here. I just want to give a plug to this conference. I think it's one of the best venues I've ever been in. And I say that, yeah, let's have a round of applause. The Hotel Georgia, sweet hotel for those who stayed here, great place, and it's been really good. But the conference promoters really thought through this. And I thought, why didn't somebody do this earlier? Because as retail investors, I don't like the big shows with 400, 500 booths. Why? Because my subscribers will come up to me and say, Greg, which company should I go talk to? And I said, well, to be honest, there's only like 5 to 6% of the companies I'd even be willing to talk to, let alone recommend. So most of this is scam, you know? And so that's quite shocking at a retail conference, whereas this venue, I could comfortably say that any of the companies out there I like. I may not recommend them, but I could say they're all good companies. They're all trying to do the right thing for the right reason. And that's a big difference at a conference, and that protects you, the retail investor. The newsletter writers that are here are not bought and paid for, whereas others in the industry are, and that's very troubling to me. Just to drive that point home, I'll give you one example, the most egregious that ever happened to me. I was at PDAC one year, and you know, I usually like to go on the conference floor before the crowds get on there. So right when the companies are setting up, I like to try to catch everybody before they get going. And I can get a lot more done that way. Well, anyway, this one gentleman comes up to me and he says, well, you know, what do I need to do to get you to write me up? I go, well, it doesn't work that way. You know, if you want me to sit down and I'll evaluate your company, that's one thing, but you know, it's all on my evaluation process. And he says, come on, everybody's got a number. What if I wrote you a check for 25 grand right now? Would you write me up? I said, no, it's not worth my reputation. And so he literally got his checkbook out as I turned on my heel. He says, come on, I'll write you a check right now for $50,000. All you have to do is recommend me in your newsletter. I said, sir, you don't get it. And you just proved to me that you're a person I never want to talk to again, right? So that mentality, yeah. That mentality is far different from what you get at the big shows where it's pay for play. Just, if you want to come, you just pay your ticket, you pay the price, and you're in, and your admission's in, you're in, right? So anyway, that's just one thing I wanted to say, but the conference is well done. I just wanted to thank everybody who's organized it, and if they want me back, I'll be here for all their conferences next year. Next item on my little list to clean up before I go into my presentation, you know, as subscriber-based publications, since we don't have any other form of income, you know, for less than $1,000, I think you could subscribe with all the discounts we're offering at the show. I think you could subscribe to every newsletter for the whole year for less than $1,000. That's really good research. These are good people. I've known Jay Taylor, John Kaiser, Gwen. I've known Eric and his brother, who's unfortunately passed away, for years, and these are people I trust. And you know, they're all good people, and the discounts we're offering is a great value right now. Anyway, this morning at our little panel discussion, for those that weren't there, I want to share this because I think it's one of the most valuable little tidbits that you'll get in my talk today, and that was the most important conference I go to every year is the Precious Metals Summit at Beaver Creek, Colorado. I live in Denver, so it's just a 2-hour drive up the hill for me. But, you know, in the last 5, 6 years, it hasn't been very well attended. And this year was the first year where they had a dramatic increase in attendance. So when I get there, I always want to talk to these guys and see, what are you doing? What are you thinking? Are you gonna start really coming with the big money into this market? Because they are the biggest drivers of our market, right? And this one particular fund manager that manages over 30 billion, right, says to me, you know, well, he hadn't been here in a while. And I said, oh, so you're getting ready? He said, oh, I'm kicking the tires, Greg, but I'm not really ready to come in big yet. You know, I like gold, but the time's not yet. Well, what are you basing that on? Well, he says, you know, I've been just watching the Federal Reserve, and as soon as they do a dump of money into the money supply, Facebook goes up. Money supply, Facebook goes up. He says it's been the dumbest, stupidest trade I've ever done in my life, but I've made more money from it. in the last several years, and why would I want to change that right now? So anyway, I said to him, I said, well, you know, you like gold. I know you like gold. What do you see on the horizon? He said, well, he says, what's happening with the Fed, the money supply increase, is unsustainable. We all know it's coming to an end, but when? Right? It's not a matter of if this is coming, this event. This is a big monetary event that's going to be earth-shaking in its, you know, impact, right? So anyway, I just thought that was a very keen insight into what's going on, and I didn't want to hear that at the time. I was hoping that we were going to get the fall run up in the mining stocks, that we were going to have a good fall run. And as soon as I heard that, I knew nothing was going to happen this fall, and tax loss selling would hit early, and it has. So that's where we are. It's the market overall is there's good values, I think. You know, there's companies we'll talk about after my talk today, but the values are there. And but the market's looking for a catalyst. And before I go into that, one of the other things I heard on my little list of things to talk about, you know, as I've been in conversations and listening to others, I keep hearing this word patient. You know, we got to be patient. You know, we've been patient. We got to be more patient. You know, I'm thinking more patient. How much more patient do we have to be, right? We've been hanging on for a long time for many of us, trying to wait for these kind of things to happen. Well, to me, that's like the story of the man that gets to the pearly gates, and God's there to greet him, and my son, you know, how can I help you? He says, Lord, I'd like to be part of the kingdom. And he said, well, what did you do in your life to earn the respect to be here? He said, well, dear Lord, I learned patience, and I learned to check my greed and help others. And the Lord says to him, well, that's really good. Those are very good attributes, and usually you don't find those attributes combined together. It's very rare. So what do you credit this to? How did you learn this? He said, well, Lord, for 30 years I was an investor in precious metal mining shares. And the Lord said, oh, you poor suffering fool, welcome to the kingdom, right? So anyway, let's go here. So we're looking for a catalyst. And, you know, people always are asking me, Greg, you know, what's going to happen? You know, look, nobody knows the future. And I study and I look at stuff, and I'm always constantly trying to look for an edge to try to figure these things out. I rack my brain thinking about these things. But unless we have a major catalyst, a fear trade, a safe haven event, like what happened in 2008, precious metals aren't going nowhere. They're just going to track sideways because the bullion banks and the Federal Reserve keep a lid on the prices for gold and silver. They're just not letting them go above $1,300 for gold and $17 for silver. So until something changes, we are stuck with this pattern. But fortunately, the good news is that fortunately, I think the cracks that we've been watching and thinking would have happened earlier are finally starting to catch up, and we'll get into that in the presentation. Earlier this year, people have been asking me, I used to write a uranium letter called the U308 report during the last big bull run. And, you know, it happened so suddenly. We made a lot of money, and then everything got overpriced and it collapsed, right? So I only wrote the newsletter for 2 years, the U308 report. But this spring, I saw the circumstances. Several people had said, when are you going to write that again? I said, well, they'd asked me that in 2013, 14, 15. I said, oh, it's too early, right? But this spring, I said, no, we're getting close now. We're getting close, and you got to buy in before the event happens, because once it happens, you're almost too late. It just goes so quickly. And we just saw an event, Cameco. The MacArthur River project was just shut down, I believe, don't quote me on this, for 10 months. Does anybody have is that correct? 10 months, okay. So to me, this represents the bottom of the uranium market. I think this is the final straw that we're finally, for those who are interested in uranium, I'll just make a side comment on that. So anyway, let's get back to precious metals. Looking for the catalyst, signs that major changes are on the horizon. Where things stand, you know, the reckless increase in the money supply to keep the illusion that all is well will have its consequences. Eventually, right? We've been waiting on this. Even Greenspan and Bernanke have said that, we could have had a world liquidity event multiple times in the last 20 years, right? 1998 long-term capital crisis, the dot bomb collapse, 2003, 2008, lots of different venues. We were very close, right? Matter of fact, I've seen where, there's situations where, well, I'll skip that because I got to watch my time here. Anyway, this inflation, which will eventually show up, of course, will be extremely bullish for gold in the medium to long term when sanity returns to the markets. For now, it's just a matter of time and waiting and carefully watching for the signs that the greatest experiment in central bank history will finally hit the wall. Undervalued precious metals and mining shares will soar in that environment. So what we're seeing is, the Keynesian economic model, it's beyond irrational exuberance at this point. I call it euphoric insanity, right? But yet, it's what the numbers say the numbers are. And so you can't argue with that, because those that believe in Keynesian economics, they think they've been proved right, that you can create money out of thin air till the cows come home, then debts don't matter. But most people realize debts do matter, and it will catch up. So when the confidence turns, when this euphoria finally gets pricked, these bubbles are so huge at this point, they're so out of whack with reality. The reporting by the government and the media is so untruthful, right? How can you believe anything they say? I often say, gosh, the only thing I trust in the media anymore is the sports scores, right? Anyway, so I just think we're coming to a point where when this confidence turns and fear returns to the markets, sometimes between now and probably 2019, gold and silver will surge. And usually when I talk about gold, I'm talking about all the precious metals. We use that one word sometimes to talk about all of them, but I'm bullish on all the precious metals. And due to the lack of supply, very few investors will be able to buy physical gold and silver. You can still get it right now really easily, really cheaply, but the day is coming when you won't be able to get it. I can promise you that. I can see the things that are happening behind the scene, and that day is coming. The time to think of wealth preservation and to buy insurance is today, when physical gold and silver can be found at very low prices. At some point, the gold and silver prices will rise and will dwarf that of the current surge in Bitcoin, and to be left behind will be a fatal mistake. So what are the catalysts that we're looking at? One of the ones that I really think is interesting is this Chinese gold-backed petrodollar. I think this is one of the biggies, because we have to break the back of this US dollar, this dominance, this reserve currency status that the United States has had this unfair advantage for so long. And, the inflation that we keep creating, we haven't felt any consequences like Zimbabwe or Argentina or Mexico have felt when they've increased their money supply in ridiculous ways. We've exported our inflation. And so if we lose this privilege with the dollar, I just think we're coming to the point where we're going to see massive amounts of money coming back to our shores, and it's going to cause all kinds of havoc with our government and the debts that we have. So just some of the ones other than the Chinese petrodollar, which I think is one to watch very closely. The current account deficit of the United States, $20 trillion and growing rapidly. Unfunded liabilities, promises to pay the United States government that they don't have, $104 trillion, right? Pension fund, unfunded liabilities just in the United States, $4 trillion. I just heard that number is now $7 trillion. So that's gone up just in the last 3 months from what they said. Combined deficits of other world governments, $39.7 trillion. Estimated combined derivative liability exceeds 1.4 quadrillion. This is an insane number, okay? A million seconds, in terms of seconds, a million seconds is 12 days. A billion seconds is 32 years. A trillion seconds is 32,000 years. And a quadrillion seconds is what? 320,000 years, right? It's ridiculous, right? These numbers, there's no more bailouts. There's no more fixing these things, right? It's way out of control. Potential for World War III. We see what's going on with Trump and this guy Kim in North Korea. State governments, mark my words, the first state to go bankrupt in the United States will be Illinois, right? Go Google search the debt of Illinois. It's so ridiculous. Even the governor has said There's no way we can ever repay this. We're raising taxes, but people are leaving, so there's no way. And they don't have a printing press like the government does to create more money. So what are these states going to do? Well, guess what? Pensions are going to be cut. The state employees are going to lose their pensions. That'll be the first thing that gets cut, right? And that shockwave is going to spread because there's 21 other states that are just similar to Illinois, but not quite as bad yet. You know, the financial bubbles we've talked about, 2008 financial crisis, just the leading edge of the hurricane, as Doug Casey often says. Corrupt and criminal nature of governments. I mean, I travel the world. I'm shocked at some of the corruption and criminal acts that go on by government, right? Why do people trust government anymore? I have no idea. Division of the people worldwide. Beware of bail-ins versus bailouts. You know what a bailout is? A bail-in is when the 45 too big to fail institutions get in trouble and they come after depositors' money. That's a bail-in. And they've already signed on to it, all the governments and central banks of the world. They've already signed it. You think they're not going to do it when it happens? Keeping your money in the bank is getting dangerous, right? So on and on and on it goes, right? Anyway, watch the dollar. I think the dollar has to be broken. This dollar hegemony has to be broken. And I thought we were getting close in September there, and that's why I was optimistic we were going to see a fall run. I think the dollar, we have to break the 90 level. And I think we're going to test it again very soon, but we'll have to see if there's enough information or enough catalyst to get people to realize that there's a major change coming. And that's the change I'm talking about. The dollar losing its reserve currency status will send gold and silver soaring. Right now, gold and silver continue to build massive bases as central banks and their allies keep the price of both under pressure in the paper markets. However, the metals and their respective equities remain among the few underpriced assets in a grossly overinflated financial environment. When the tide turns, and it will, most observers will be greatly surprised by the upside price action in the precious metals. The fact that many investors have given up on them just adds to the attraction. And at the current time, I would suggest that Bitcoin enthusiasts be careful here, as the authorities are now in the process of setting up a futures contract for the Bitcoin, okay? This is how they have manipulated against gold and silver. Bitcoin, it just goes against the people that run our world are not going to allow competition to their money scheme, right? The power to create money. So obviously for the people, I like the concept of Bitcoin, but the powers that be, I don't see how they can possibly allow this, right? We should support a free currency, right? Anyway, this is how gold and silver prices have been controlled and continually suppressed through the past decades. Gold, great unknown quote, I like this. Gold is the currency of monarchs, silver is the currency of the educated, barter is the currency of the working class, and debt is the currency of slaves, and that's the debt we're under right now. Author unknown. The illusion is that all is well, but the real data says otherwise. We're looking around at the media is telling us everything's great, right? But 78% of US workers are living paycheck to paycheck, right? Strapped with enormous credit card debt. 49% of Canadians are living paycheck to paycheck with massive debt loads, right? The massive credit expansion has created insane wealth for the minuscule elite. Less than 0.7% now own 45% of the world's wealth. How did that happen, right? That's not good for the world, right? And just a small fraction of that wealth could feed the entire world, right? There should be no food problems, right? Everybody should not have a hungry belly. Anyway, 8% now own 85% of the world's wealth, 8%. So gold is money. I'm just going to finish that. I think we're coming to a monetary event where gold is going to be the king tut. It's the final solution, right? To all these problems, all this debt. He said gold is money, everything else is credit, okay? Well, what he was trying to say, he actually said money is gold, nothing else. But they rewrote the quote to better portray what he was trying to say. So I read through the testimony he gave in Congress in 1912, and this is what he said. J.P. Morgan was, in my opinion, trying to convey the idea, this knowledge, that gold was the money itself and everything else was a derivative derived from this money. He understood that any currency, any debt, any equity receipt has counterparty risk. He understood that promises were made to be broken. They could be broken outright through fraud or default, or broken slowly through the debasement of currency. He also understood that the larger the chain of promises became, like we see now, the more likely that one link in the chain would ultimately break, rendering all the other links worthless. What he was trying to explain is that physical gold in your possession has no counterparty risk. Gold does not derive its value from anything or anywhere. Gold is value because it's the money itself in the most pure and basic form. Gold will be the last man standing, so to speak, when everything else falls down around it. Not only will it be standing, but it will be standing tall because of fear and panic. Physical gold is a tiny market. If you melted all the bullion coins and bars, all the jewelry, and all the central bank holdings, investor holdings, melted into a giant cube, the cube measures 30 yards by 30 yards by 30 yards. That's why they call it precious. You want to own a chunk of that. So I only got a minute left here, so I'll just wrap up. When the media ignore the truth, the media are not telling you the truth. You're being bamboozled, right? I just say don't listen to this stuff. But Jim Sinclair quote, thus, the reason they do this, thus managing appearances and perceptions becomes the political art of a failing economy. Reality is masked while inaccurate perceptions are constantly projected on us. Don't believe it. Do what's in your best interest. Gold is the canary in the coal mine. So anyway, I'll leave this one. No one can fix the government. Last quote. This is a Richard Maybury quote. It's unfunded liabilities, which are the monies it does not have to pay all the obligations politicians have incurred, another $104 trillion. That's $874,000 per taxpayer. An average family of 4 is on the hook for $3.5 million over and above present taxes. The situation is hopeless, utterly hopeless, right? The only thing to do is stand aside and let the federal government commit economic suicide, right? Do not get in the way. Then make a fresh start. For investors, it's crucially important to keep in mind that the government is not the country. When the government kills itself, the country will endure. The homes, the cars, the furniture, factories, roads, offices, airports, computers, ranches, purple majesties, right? And amber waves of grain will not vanish, right? Nor will the population, but flows of money will shift, causing ownership of the assets to change. The trick to what's coming is to be on the receiving end of the transfers, not the losing end. And to be on the winning end, you're going to have to own physical metal and mining shares, the equities. That's where the action is going to be. Gold is the final solution to all these problems. Thank you for listening.